Hey everybody, this is Jim at SP500chart.com. It is a little after 4 o'clock on March 25th, 2013. And we're going to take a look at the chart, see if anything new developed today that changes our outlook, changes our expectations. And before we do so, just need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you should be making investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's do just that. Okay, we're looking at a 10-minute chart, and boy, we had what it looked like a nice initial move up. I'm going to move this line back here just for a second, okay? It's going to get changed, but I just want to show you what I saw. A nice initial move up on, pardon me for doing this, but the stock market went up when it became clear that it would be okay for Cyprus to rob the banks clean. I mean, get that. I'm not making a political comment really so much, but think about it. What is it? Something like a 40% essentially a tax being levied on the quote rich. Basically, assets being seized by the government, and I find it surprising that any market would rally on private assets being seized by a government to that kind of tune, to any kind of tune. But that's what it is. The market reacted initially favorably to that Cyprus would remain a part of the European Union, I guess, or I don't know. I don't get into all these things to the nth degree, but there we had that spike up, and then what, 30 minutes later, an hour later, gave it all back. And it was as if this didn't even happen. This 20%, first 20% of the day, just once it got up there and got reversed, it was just like, I can't put my hand in front of it, but it's almost as if you could just take an eraser and get rid of what's right there. And this is what the market was really kind of technically, what's the word I'm using, what I'm looking for? This is what the market was technically primed to do. What was in this little oval was what the news did to make the market get a little reaction. Now, I mentioned that we had had a line right here that I was thinking may serve as an inverted head and shoulders neckline. Now it's starting to look a little bit funky. So I'm just, for the sake of being safe, since we saw that line could get taken out earlier today and it didn't hold, I'm just going to move this line here. And basically, I'm saying that we've got resistance up right around 1565. If the market can get over that, then I think we look at the depth of this pattern, and we still say we're looking at something in the mid 1580s. But it's got to get over this, and clearly that turned it back today. So there's more work that needs to be done if that is going to take place. Now there's a bullish case. That's the potential bullish case. And over the weekend I also discussed a potential bearish case. And I did the same thing over the weekend that I just did there. I went to the daily chart instead of the hourly chart. And basically what that would mean is that we may be setting up a left shoulder, head, right shoulder scenario that could be setting up a top. And if that's the case, we may be very near that top. This red line right here is our long-term tops line. that we have to go all the way to a 9-day chart to see. There that line is. We are very, very, very close to that. And if we get up there, I think you just have to, even though it looks so obvious, it looks like it's marching straight down Main Street, I still think you have to respect that. So let's just see what happens over the next week. See if we get a rally above this 1565-ish line, and if we do, see if we get that 1585. And if we get that, then see, do we get a trip back down that starts to take out some of these levels of support? Eventually, it's going to happen. If you take a look at what we've seen all year long, for the most part, we spent a month and a half in this narrow red channel right here that broke. We formed a consolidation pattern, came up, could not regain this channel, instead kind of hugged that lower line, broke in a smaller channel that we drew in blue, very narrow, right here and here. Now it looks like the S&P is trying to form another consolidation. And like I said, if you can get over this 1565, then I think the mid-1580s are called for. If it can't do that, we may, in retrospect, be looking at this 1565 area as being top territory, and even possibly long-term top. I'm not quite ready to say that yet because we have not formed a pattern that says this is a top. Haven't done that yet. If we were to come down through this yellow line and get down to the 1490s, then make another shoulder that gets up to the 1530, 1540 area, then turn back down, then we may be looking at what we're seeing here as a top. But it's not a top yet. So for that reason and that reason alone, let's keep this line in mind going forward in case the S&P rallies over that, signaling we're not done with this bull move yet. So guys, that's pretty much it for today. Just nothing really happened. Like I said, that initial burst was just sort of got given back pretty quickly. So I would consider this almost something that didn't happen, except for the fact that we see now resistance again in the mid-1560s, and we got probably that extra little move that we saw this morning gives me a little bit better feeling about the short-term inverted head and shoulders pattern right here, about it having reached its target that is still just a hair from being reached. But hey, this is good enough for government work. So guys, thanks for watching. Take care. Thank you for your support, and let's see what the rest of this week brings us.